Thanks very much. So, yeah, bio is not entirely true. Decide which part you want to believe. Thanks, Terry and Lawrence, for the introduction today, and I think you led into my talk really nicely, because one of the things that's truly proprietary about Canada, and it's fostered the growth of the likes of RIM, is our public venture capital market. And the TSX Venture Exchange, which I had the privilege of leading and have for the last 3 years, is something that is a global leader. And it's truly unique about how we fostered these Canadian companies that are now part of the TSX 60 or dual listed between Canada and the US. And I'd like to just do a quick little introduction to it, hitting on maybe a couple of the topics that we also hit, like AI, cannabis, and why it's worked so well for us. So I'm gonna fly through this and try to get us back on a little bit of time. But if we go back to 2014, the cannabis industry didn't exist in Canada. It wasn't until we had two entrepreneurs, it did exist, it was just maybe in the shadows a little bit. But back in 2014, we had two entrepreneurs, Bruce Litton and Chuck Rafiki, who staked out the Smith Falls Hershey's factory and decided they were going to turn it into a marijuana grow-up. And so we looked at that, and this was honestly the beginning of the cannabis industry in Canada, something that now on our markets alone represents over $55 billion in aggregate market value. So Chuck and Bruce decide they stake this property out, and they come to us at the TSX Venture Exchange and they say, hey, we need to figure out how to raise some money to do this. And one of our deal makers had what we call a capital pool company, which is a blind pool of capital that's publicly listed on the TSX Venture. And that capital pool company said, we will issue you 135 million publicly traded shares in exchange for the entire marijuana grow-up that you guys have just built out, which was called Tweed at the time. So this exchange of shares created the first publicly traded marijuana company in Canada. It established our leadership position around the world in an industry that is just burgeoning and growing now, and it turned into what's now Canopy Growth Corp. So you think about, why would a company go public? You talk about these entrepreneurs that have no revenue at this time. They have nothing but an idea in an industry that is totally dynamic with changing regulations by the day, and these guys are trying to build a business. So they need access to capital to be able to convert this chocolate factory into a marijuana grow-up. They need liquidity for their shareholders so that you're not handcuffed to the VCs. And anybody that's done a VC deal knows that you have a few years to return that money to the VC before they force you to sell the business. And then you have share currency for making acquisitions. And that share currency can actually be really powerful as you think about, how do you scale a business? How do you acquire competitors or other synergistic companies? And how do you incent employees to stick around? And that's what Canopy Growth Corp has done over the last 5 years now. So if we look at their original listing around $4, that company has now returned over 2,000% to their early investors. And this is kind of like comparing Uber to the VC model, cherry picking some of our biggest winners, especially over the last few years. But what Canopy has been able to do is grow that business from being this tiny little 25-cent deal into a $23.3 billion market cap company that's listed between the TSX and the New York Stock Exchange as well. They've got over 2,700 employees. And so we talk about the role of government and how tax dollars get allocated. This was all built on the back of the private sector. This is all retail investors and people who were able to come to the TSX Venture or the TSX and buy shares or participate in the financing, which they raised over $5.7 billion to be able to build this business. And so what is it about the TSX Venture that makes us globally unique? Because you look at NASDAQ, and NASDAQ's got First North, and they talk about the number of grads they get off First North. They don't have the ecosystem that we do here in Canada. And we talked about BlackBerry a little bit in the last panel, and Jim Balsillie, when he wanted to go public, when he needed to figure out how to raise money to take BlackBerry to the next level, it was GMP, an independent underwriter here in Canada, that said they would raise the first round of capital for him. So we have this unique ecosystem of regulators that don't make you comply with Sarbanes-Oxley. They have right-sized regulation to ensure transparency to the markets, but you're not spending millions of dollars a year to be a public company. We have the deal makers, like the guys who put the capital pool company together that turned into Canopy Growth Corp. And then we have retail investors who are actually active here in this market. Today, the TSX Venture Exchange represents about $50 billion in aggregate market cap. And it's still pretty heavily weighted to mining, which is a function of where Canada has grown. And a big part of our economy. What's really exciting for me though is, technology background and entrepreneur, the growth that we're seeing of all of these deal makers and these tools like the Capital Pool Company being used by technology issuers and marijuana issuers to bring companies public, raise capital, and be able to continue to grow that business. 2018, we raised over $6.8 billion for companies that are listed with us. A little bit of the track record, and I mentioned that we're globally unique and we're the leaders in being able to do this. Over 650 companies have graduated off of the TSX Venture Exchange up to the TSX. Those companies now represent roughly 20% of the S&P TSX index. So they're the companies that are in everybody's pension fund and CPPIB. All of these companies, 20% of them started out with us as little companies that were able to raise that first round of private placement to be able to scale up and grow, like some Wheaton Precious Metals or Canopy or next slide. And so when you think about how these companies are really growing, it's most exciting for me to be able to see our mining sector continues to lead, and over half of the world's mining companies are listed with us on the TSX or the Venture. But we're now seeing the life sciences space, the technology space, we're seeing double the amount of money going into those two sectors that we did 4 years ago. And so that's a nod to what's going on in Toronto, what's going on in Vancouver, all of these other technology hubs and entrepreneurs who are figuring out, how do we raise money, how do we grow in Canada, how do we keep our employees in Canada, and how do we build Canadian leaders? When you think about track record, and this was a study that we did, albeit as imperfect as they get, but the best proxy that we have, we looked at 1,100 companies that had raised seed rounds between 2008 and 2010. We then compared that to the 100 technology issuers that had gone public on the Venture in that same period. And when we looked at that, the really interesting stat that we found was that less than 15% of those companies that went through the private sector were able to raise a third or more round of follow-on capital. So that means they raised one round of seed, second round, couldn't get to the third. Over 66%, over 2/3 of the companies listed with us raised 3 or more rounds of capital. So those companies were all able to find a new investor and be able to continue to fund the growth of their business, providing liquidity to those investors that were there and build new leaders. Another interesting stat, and this is kind of a function of VC. VC likes to push companies to exit via M&A. When you're listed on the TSX Venture and you're trying to grow a business, only 13% of those companies exited by M&A. That's a nod to those companies who are looking to really, truly build the next global leader. They want to build a BlackBerry, they want to build a Canopy Growth Corp. So they all try to build businesses for the long term with us. And the ultimate stat that everyone speaks to is the number of unicorns. And that stat is absolutely identical between those VC-funded companies and those companies that leverage public venture capital. Roughly 1% of all the companies that got up and got listed were able to hit that $1 billion note. And so we look at some of the companies that were able to do that. We've had 7 unicorns in the technology space created through the TSX Venture Exchange, 46 centaurs, which is 100 million or more. 49 graduates in the technology space have gone up to the TSX from us, from the Venture, and 78% of the technology issuers raised capital between 2016 and 2018. So this is just, it speaks to the access to capital that technology companies listed here in Canada have. Some of the favorite ones that I like to point to, Pure Technologies was one of my old clients when I was in investment banking. I helped them raise their first $2.5 million. They exited for $510 million to Xylem. Solium was another Calgary-based company that went public for $2 million originally. They just got acquired by Morgan Stanley for $1 billion. So the track record of these companies that have grown with us and have actually been able to hit those billion-dollar marks and become big exits is pretty impressive.